Good morning. Good morning. Welcome to my channel, Build and Innovate. We're going to build the strategies. So please subscribe to my channel. I'm going to show you the best teaching that the setups that I'm planning to trade with you guys. So welcome to my channel, YouTube channel, Build and Innovate. So we're going to innovate some strategy. We're going to build, and we're going to see what's the best setup we can create. Okay, let's start it. What we have. Okay, I want to transition to my teaching. Just a second. You know, more likely double top than diversion, but still, can you see my entry and my exit here?
I love it, right? And here's the one thing I will say. Look at how wide this area is right here. Yes, there's stuff here, but look at how far out all this is. Here, it really wasn't spread out, but this was also a V-shaped reversal, right? So here, I would say, okay, hey, you could try this divergence right here, because if you look to the left, there's nothing right here because a lot of time went through.
So it's
like you're talking.
It's not as close, but in disadvantage of this, see how price was choppy to climbing up.
Yeah, well, so what happened here was, look at the price right here. You have all this price action, right? We finally broke above. We pulled back. You could have done the fib pullback trade here. Once we broke this area, right? And then we rallied, you could say, hey, let me look for the pullback here. You could have played that trade, that would have worked. But then you look at the move. It's a nice big clean power move up, waterfall down, reverse waterfall straight up, right? And then you had a divergence from here to here, here to here, but you also had a little tiny divergence here to here, here to here. See that?
Yes, and what's my 910? See how legit I got filled and got my 2 points.
Yeah. But it's great, right? Like you're not overstaying your welcome, and you don't care what the thing does after you get filled. Or you gotta learn to not care, right?
Yeah, I mean 2 points. I mean, it's good, but if I would trade it with 2 contracts, I would leave it as a runner, the second one. But we're just talking about quick trade. Yeah, I mean, with the micros, it's possible to keep other one for the runners, I think.
Correct. Here's another trade. Look at this, right? We fall down, boom, nice clean waterfall, right? Big red candles, right? Think of this, the bigger the candles, the more capitulation there is. There's nothing to the left, right? We bounce, we roll back over. Look at this divergence from here to here, right? Here to here, we bounce, and then this would have been the pullback or the kickback to here.
Let me try it for the sake of Yeah, it's very nice. I missed that one.
And then look at the stochastic. Okay, right here, look at what we're almost near the lows, and look at the stochastic.
Oh, by the way,
Okay,
when you're waiting for the kickback, what your preferable stochastic allocation and a kickback?
I mean, is something, this is your home run setup, right? Where we've had deep pullback and this thing barely moved. We're almost down, all the way back down near the lows, and this thing is what, if 50, this thing should be way down here, right? But then again, look at where this price landed. This price landed exactly at those lows.
Mm.
And so the trade would have been, when you saw that, just glance at the stochastic. Oh, wow, this thing's really not pulling back as prices. Let me throw the order in, and your stop goes here. And guess what? Before you know, you're in and out of the trade with your 2 points. And you literally took zero risk.
Yeah.
You had zero drawdown.
And I like this. There's nothing in the left.
Correct. This is your ultimate dream, right? Where there's nothing to the left. Even here, right? There's nothing to the left. Look at this divergence, right? Draw it from this candle low to this low, here to here.
Is it, let me try. Is it right here?
Well, no. Here. When you're drawing, just use your crosshairs, right? Just put your crosshair right here. Put your crosshair right there. And that's where you start the draw from.
Okay, let me try. So right here, right?
Yeah, from the low of that candle to that low. There you go. You see the divergence?
Man, I wouldn't even see that. It's so little. I think this kind of a diversion not worked. It's kind of, it's like barely. Right here is basically flat.
Yeah, but again, the more you watch, the more you'll see them. Did it work? Yeah, because this was the kickback, right? This area was the kickback. The only difference is it didn't kick back far enough. I would have leaned against the body right there. You missed it by a point because look at the bounce you had.
Jason, is it kind of a missed trade because it's kind of a long time kickback, or it's not?
That, me personally, that took a little too much time. I would have rather seen it go here. I would have rather seen it go here and then have this pullback right here, like this.
Yeah, because that's what I'm talking about. It's kind of a too much time for me. And
yeah.
and
but
like this. So what concerns me? So I'm telling you, I feel more safe on kind of this kickback. Either this, I explain why. Because when it's trend down, and trend is strong, it's more likely gonna be trend continuation. You're gonna get stopped out because the trend is down. For me, this is more, I would more afraid of this kind of a trade. This, I know it's kind of it's time to pull back. It's a fib zone. So for me, this is more safe than this. I don't know why.
No, because you have more confluence up here, right? There's more confluence up here than there is down here. But this is, look at your risk. You literally had a point of risk. a 1.5 of risk.
So show me where you would put the limit order.
Oh, I would have leaned against all these little wick lows right here in the wick low, because I think you have like one wick, this candle that went a little lower. I would have probably leaned there against these bodies and look for that pullback.
There was the most legit pullback, kickback.
But look at that divergence, right? Look at how clean that divergence is. And normally you want to see this low right around that 20 level, right? You want to see this low in the teens or even the single digits, and then this right around the 20 to bounce off that 20 level, right, for that divergence. And then on the pullback, you really want to see like it barely even pull back, right? It's telling you there's no momentum on that pullback.
So if this stochastic would in an oversold area, it's not good for kickback.
No, it's good where it's at, right? Now, if it was way down here, if we're here and we're way down here, I probably wouldn't take it maybe.
Yeah, but the second wave, when we see this diversion, second wave, what if it would be like in like 40s area? Is it like bad or what?
Oh, even better. Dude, this was way up here. That's even better because now it's an even bigger divergence, right?
Yeah.
Think about it, because there was no selling, no real selling on that big push lower.
Got you. Well, how would you how could you miss this trade, Jason?
Well, here, like this, look at this kickback. As we come up, look how low we are. We're almost near the highs and we're way down here. All I want you to do is tomorrow, right? Focus on when we're doing the kickback and we're doing divergences, always glance at these and look at where they are in real time.
So let me give me the so this is like really like where's the so this is a really good location of diversion right here, right?
Correct. Just like this, I'm sorry, this guy right here is really good location, because think about the kickback. We're near those highs doing a double top, and look at how low we are.
It's saying like lack of momentum.
Correct.
Let me I wanna do
I would also do a drawing of the other one too, right? Because now you see one to the upside and one to the downside.
Oh, just a second. I'm gonna actually print this chart. I'm gonna print it because it's kind of, for me, it's visually. I just wanna. See, this is the all nuances. It's really like it's really helping.
Yeah, that's where when you watch all day, you see these things in real time. this is why I'm such a big believer in just watching and not so much trading, right? Just watch the charts for a couple days, because as you watch, you start to see things happen.
But when you watch it and trade it and it's working, you have even more joy.
Oh, of course, right? I mean, like I said, and I was thinking about this the other day, right? I'm not saying don't trade, but I'm just saying you'll learn a lot by watching, and it'll keep you out of trouble, because like right now, you don't know what's good, what's bad, correct?
Mhm.
Like you're learning, you're now starting to put all these things into work. You look to the left, okay, we're making new lows, right? Like right here, hey, we broke down out of all this price action. There's nothing here. If this makes a low, when we're making a low, we're oversold. You should be going like this. Watch me real quick, right? You're like this, and as we're falling and you see us making a low and there's nothing here, you should be like this. Okay, now I'm ready. And you want to anticipate the bounce and then the new low and the divergence. I want you to watch the waterfalls, right?
But
As we're making a new low.
the divergence is happened when waterfall broke, right?
Well, that confirms it.
Okay.
Remember, the waterfall confirms the divergence. So on this candle, when we broke above this black candle, it confirmed that divergence in the candle closed, right?
Uh-huh.
And then guess what? We started to go up. And then now as we're going up, we're watching for a pullback. So we're watching the reverse waterfall to pull back. And then we get that. And, okay, cool. And now we're putting our order in.
Sorry, I just texting back.
No, go for it.
Yeah. So for me, yeah. So basically, when it's new low, my focus on pullback, and as soon the waterfall is broke the previous candle, it's extreme attention for basically after this move, I already would set the limit order right here, right?
Correct. Well, once you see us rolling back over, right? Because sometimes it happens really quick. You gotta be on top of it, right? So when we're coming down and then we're bouncing, we're making new lows. You now see the divergence, right? We're making new lows. You see the divergence. You should be looking over here. Okay, where am I gonna lean? Okay, 99 and a quarter is the low. These two bodies, right, are at 99 even. Okay, I'm gonna put order in at 99 and a quarter. My stop goes one tick below this low. These are all the things you're processing in your brain while we're kind of bouncing, right? As we're bouncing, you're now getting ready for the kickback. You're doing all this, and then as we're falling, you're watching the stochastic going, okay, wait, we're falling, but this is barely moving. This thing should be way down here. That's a telltale to give you more confidence that, hey, this trade potentially could work out good.
Yeah, but usually, I need some time to measure, like, okay, what's my risk? Okay, this is 2 points. So, and it's very cool from the chart. You just go like right, and you just, okay, buy, sell, limit. It's right here, right away.
Yeah.
So, okay, so this is a lack of momentum. If this would was like right here, that's mean it's kind of a can stop me out, right?
Yeah, meaning it's probably gonna keep going lower, right?
It's a good tip, Jason. It's a good tip. Um, what else? What else? Okay, okay, got it. This is well, let's go back to my micros trade. So this one you already saw how I make $17 right here.
I love it.
Yeah. Let me. So my second trade was right here. Tell me. I know it's kind of busy, but I see. So basically, I put my limit order right here. There is point of control right here. There is a 7.5 fib, and what kind of the fear. So when I enter right here, I explain why I exit so early. So when I enter right here, and it kind of goes to my favor, but then it go back and it's retraced almost 100% of this swing. So for me, it's kind of a rescue mission. I didn't add any contracts here, but I was okay. I need to get out of this trade because I see this like double bottom, in the bigger picture.
Yeah.
In the bigger picture, and also, do you see how it's clean go up? So I thought it's gonna retrace pretty good, but the second factor, it was in a power hour. It was like 12:17. So and in power hour, it's kind of a risky. It couldn't be just moving in one direction for and when the price went to my break even, I closed the trade with a dollar profit. So what do you what are your recommendation on this trade?
So for me, I would draw it from this high right here because it's the highest peak to this low.
No, this was my trade. See my fib? It's right here.
Yeah. From I'm telling you where I would draw, because normally I might have drawn here. I might have drawn here to here or here to here, but because I'm watching the bigger picture where this price action, and this is probably really important, is this little micro move right here, up, down, that was the high before we took out that low. Okay, so this is when we came all the way down here. I say we took out that low, so I would draw it from here to here, and that's the reason, because we took out all of this price action. Okay, so I like that fib draw. Up here, I think what happens is, remember, if you're playing the 75, and I've actually been playing around with the 75 a little more versus the 70. I kind of like the 75 more because it means I only have 25 here worth of risk, right?
Yeah, but today, like today was crazy because of the Japanese, but I'm telling you, I missed like three let me get them. I missed three fib trade that worked perfectly, and they all, work from, like you see right here. They all work from 6.8 and go down. So for me, like this trade, I missed, but I saw like it's go down, hit the target, and for me, it was not valid anymore.
Yeah, it's correct. It's one of those things where the more you watch, the more you'll form it to yourself. But here, I would have done this trade. I would have did exactly what you did. See this, watch it roll over, And then when we didn't roll over, I would have probably just gone out at break even and said, okay, dude, this thing's too strong. Okay, because 6 out of 10 times we'll keep going higher on a pattern like this, or 7 out of 10 times. This is one of the 3 times where we failed.
You
So
know,
so and guess what? Do you walk away with $1? The trade didn't do what you wanted to within your time frame, and it's okay. It's better than staying in and taking a loss.
yeah. So for me, it was a risk commission, and I thought, okay, like you said, this candle is kind of scares me. I'm like, okay, this is retraced almost 100%. So the chances is gonna just chop and take me out pretty high. So I just break even, and I just got out of the trade.
No, and then guess what? It rolled over and it fell, right?
Yeah,
That's fine.
but you can you cannot be right 100%.
Yeah, but what you did, and just so you understand, what you did was you were protecting your capital. Jump out. It's like that wave, right? Or if you start to see red flags, things you don't like, just kill the trade. Take a small loss, right? You can always re-enter later on. You'll make it up on the next trade. Because what happens is everything will look really good, really clean, and then it gets ugly. And when it gets ugly, you got to make that split decision. And it's kind of like, could this thing have stopped you out? And you would have been pissed, gone, oh man, right? And you need to be okay with your decision. Like I took a trade where I jumped in, everything looked good. And then the minute I jumped in, I'm like, I don't like this. And I killed it. And literally 20 seconds later, the thing fell and flushed, right? And I would have been stopped out for a whole position. But because I saw something and I acted upon it, I took a tiny loss on it.
Yeah, I think the biggest thing we need to understand that, I mean, we're not like we cannot predict the market. I mean, of course, I mean, not blame myself for the decision that, because when you see it works, but what if it not worked, you know?
Yeah, to protect your capital, you can always re-enter. Remember, our job is to find high probability trades. If we enter a high probability trade and there's something we don't like, kill it.
See how when it was raising, I usually I would put the limit order under the 6.8, but I saw the stochastic was not oversold and it was right here, and I thought, okay, I just moved my order higher and say, okay, while it's going to be oversold, and there's more confluence with 200, I placed, and the VPOC point of control, I just put it right here, you know. It's helped me too a little bit.
Yeah. Like you said, right? You're looking for confluence. You're looking for a lot of stuff, and this is, it just got ugly. I mean, if you actually look, you actually had a double top with divergence, right? Right here. The only thing that I would have said you could have done was when we were here, rallying back up here, go, whoa, this is really lagging. Let me stay in it and see, maybe we're going to fail, right? And then the very next candle just shot straight down. And that was kind of your telltale, right? But we're looking after the fact. In real time, it probably would have been a lot harder to see that.
You know,
but
yeah, and another factor I noticed later, like I saw on my different chart, I saw how it bounced and a 200 from 1 minute, 200 from 2 minutes, and I think it was another moving average in the 5 minutes together. And when I saw that, I'm like, I should have stayed because it's kind of a more percentage that's going to fail from that kind of a support. But it's all, it's all happens so fast. You can, I mean, I'm glad I stayed my green day. I didn't. If I would lose this trade, I would wipe my $17 because I think in this trade it was like $27 the loss.
Yeah. But these are the things that everything you're doing is correct, right? You're analyzing what the market did. You're analyzing all these things, and it's another data point for you in the future to look. Like tomorrow, right? Tomorrow, you're going to be a lot more aware, hopefully, of the stochastics, right? You're going to go, okay, what's this thing doing while we're rallying back up? Now, I don't like this divergence because of all this, right? It's all choppiness. Right now, we need to get way up here or way down here for me to make a divergent trade. Think about it, right? All of this price action right here is sideways, that if I want divergence, I want to see a divergence coming up into here, or a divergence coming down, breaking down, bounce, and then making new lows and showing a divergence. That's my mindset right now. Now, will I play the fib pullbacks and all this all day long? But divergence, I just know I don't care if a divergence happens now, because there's way too much sideways action that eventually we're going to break to the upside or down.
Yeah, in the range day, yeah, I know what you're saying, but in the same time, you never know when it's going to break up,
Well, yeah, but this is what I'm planning right now, right? See, I'm just saying, I'm not going to look for any divergences within here. I want either up above this black line or below this black line. But with that being said, I don't mind doing quick little 1 minute Fibonacci pullback trades.
Man, but I'm telling you, every fib worked perfectly on this range day. Right here, you would make right here, you would make right here, like if you from here to here. So it's just everywhere. You not even just have enough time to quick understand that.
Yeah, it's it. And remember, I like looking for stuff like this right here on my fib pullbacks. Okay, I like these patterns right here where we kind of took out this, or we had the divergence, right? And then we took out this high right here, right? Pull back, and then we take out this high. This is where I would start drawing my pullbacks, because I know we were in a downtrend. Divergence, now we're in an uptrend, right? And if I could do these 1 minute really small divergent or fib pullbacks, my risk is very minimal.
I think especially with ESs, right? Like this swing, like let's see, oh my goodness, I got too much fibs. So if we would take this, so basically it's breaking the downtrend, and would you do it from here?
When we broke this level here, all this price action, right, with the divergence, I saw all that, I would probably lean against this candle low right here.
Yeah, it's I think it's where I put
and
it.
draw it.
I draw it from here, right? So
Yeah.
and look at if you would place your stop 75, it's to the tick.
Well, what you do is you place an order at 61 and then you add a second order down here. But guess what? If you did 61 and hit 38, you're already out of the trade.
Yes, yes, but it's kind of a, for me, it's even from 75, it's kind of a 375 points, 350 about.
Yeah, but it's a different trade too, right? Remember, we're not going to get 1 or 2 points of risk on these fib pullbacks. These are a different style trade, right? Where okay, instead of doing a big contract, we'll do 1 micro. Okay, we're risking $20 to make $20 now, right? On this trade. But what I'm saying is I like this pullback better than I like this big pullback, because if I go from here to here, now I'm risking 8 points or 10 points versus 3 or 4 points.
So would it kind of scares you? Okay, okay, we know it's broke the downtrend right here, but is it scares you because it's kind of a bounce from the bigger picture trend line right here, and it could just fall?
No, because wanna know why? Because of my divergence. See, the divergence adds about 10 to 15% higher probability that this will bounce on a fib pullback.
Oh, wait a minute, you mean this divergence?
Right here.
Can you draw it now?
Go for it. Go for it. You draw it.
Oh, you mean right here?
Yeah. That was the end of the move, right? Look at how far back that move goes. Show me how far back. Show me where that divergence ends right there, right? Or that the down move ends right there, right?
Look at this kickback work.
Well, yeah, that's what we were talking about earlier. That's the same trade that we were talking about.
Okay.
But think about this. This downtrend started right here. Okay, high, low, lower high, lower 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 low, right? And essentially lower high, we did the divergence right here. And then the minute we take out this high, this candle's high, it's off to the races, and we've reversed the entire trend. But the divergence, we know there was a divergence. So here's a kickback trade, right? Here's one trade, boom. And then when we take out this high, this entire structure is now bullish. And so now, as we're up here, we're looking for a pullback. And because we have the divergence, I go, okay, I feel comfortable drawing it. Let me use this swing low up. And guess what? We come right back into it and bounce. And guess what? We make a higher low. And the other thing is, when we're making this high, are we making a higher high here from the previous high? Yes. So I like that. Now, this was a divergence. If this was up here and this was down here, I wouldn't like it as much. But because everything's working perfectly, nice clean pullback. Look where we are, right near the 20. Everything looks clean.
Jason, do you recommend me focus on more changing the order flow. Like here, you know, we just broke the swing, and don't draw this to not confuse me much.
I would. I think what you should do is start to really understand the trends. Like think about it, right? Lower highs, lower lows. Every bounce was lower than the previous high, right? Think about it. High, lower 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 high. We'll use this guy. And normally I go lower high, but then we kind of failed, right? But lower high. And then the minute we took out this high, what happened? We're now making a high, a higher low, a higher high, higher low, right? For at least 1 or 2 rounds, right? But we had the divergence down here, trend reversal. Remember, if you could get this stuck in your head, Yuri, divergences usually mark lows and highs. So when we see divergence, usually we can look back and go, wow, lower highs, we've been in a downtrend for the last hour and a half. Maybe we're going to start the uptrend. And I like my odds on the pullback after all the price action of the divergence gets taken out. That is our edge. What I just showed you is our edge. And if you could drill that into your head of understanding what to look for, you go, we just had divergence. This was the last major swing high, and it got taken out right here. So now if we pull back, I'm going to be a buyer on any pullbacks. And if the stochastic is everything is the way it should be, meaning a high, a pullback, a higher high, a higher high, everything is clean, I don't mind buying on that pullback. Now, if this was a divergence, then I would have a problem, but it wasn't. It was the market is working correctly.
Yeah, yeah, it's such a good, such a good lesson, because yeah, sometimes I put a lot of stuff on my chart. It's, for me, it's more confusion. I used to trade. So for me, it's familiar. So I used to trade the order flow. So basically, I trade this swing, and if it's broken, so that's broke the trend, broke the swing, deep correction, new high. So if it's not failure, so basically I would trade the same, but I would put my stop right here, and I wait until it's gonna hit this previous low. Anyways.
Yeah, but what I'm teaching you is to look at the markets in a whole different way, right?
Mm-hmm.
I'm trying to teach you an art form, if that makes sense, right? We go very technical. We're doing a very technical dance, right? And if when you start to see this, because for years I couldn't see it, right? And then all of a sudden it just snapped, it turned on like a light bulb. I'm like, oh my God, I see it. I totally see these highs now. And then when you have the divergence, it reverses the trend. Now think about here. We actually had divergence, right here. And guess what? It was essentially the end of the trend. So if I saw this divergence here, do I want to draw my fib from here, and try and get long? No, because guess what? You got stopped out. But if you could catch this early, right? If you could catch this early in the trend, and that's what we're trying to do. We're trying to catch this early in the trend of the pullbacks. That's another edge that we have that gives us a couple percent. It's like when you play blackjack, your odds change if you hit on a 10 or a sorry, if the dealer's showing a 10, your odds are one thing, but if a dealer shows a 5, your odds are something else, because what happens is if they're showing a 5, no matter what, they have to hit, because the most they can have is an ace, which is 11 plus 5 is 16. You got hit on 17, right? So they have to draw another card, which changes their odds. And we're doing the same thing. When we see this, we see divergence, we know, okay, we're now in an uptrend. Odds are this trade's going to work 80% of the time versus 60.
See, even this trade, okay, we see the divergence right here, right? That's mean we possibly can change the trend, but even let me get this mouse. Let me oh my goodness. So okay, we saw these diversions, right? And potentially changing the trend, kind of a risky to play fib trade right here, right?
Correct.
But it still worked.
But here's the thing too, right? Now hold on for a second. If you could catch this quick enough, sometimes, why do you think it works? Because it's our kickback.
Yes.
Here's the divergence.
It's a part of kickback. So
But if we don't get the kickback, or you go farther out, maybe you drew from this low to this high for all of this price action. No, I don't like it. But for this quick little macro trade, yeah, go for it, because that's our kickback trade when we see a divergence, right?
yeah, see, if I would play it like if I draw it like this, so it would probably fail. Yeah.
Yeah, it failed. You would have gotten stopped out because of the divergence.
Man, see how, man, Jason, this is unbelievable. On this circle, we just observe like 4 trades. Diversion, kickback, work. Flip, work. Diversion, kickback, work.
Like I said, you can find when you know how some people go, dude, it's so hard to find a trade, right? Or this or that. No, it's not. You can find trades anytime. Right? If you know what to look for, because think about it, right? And so we could just do this little pullback right here and look for a trade. I mean, it's you just need to learn what to look for. Now, real quick, go to the first half hour of the market.
First hour, okay.
6:30 to 7. Just this right here.
Okay.
Okay. There really wasn't any trades, was there? It was, I mean, there were, but it was very choppy. It wasn't clean and methodical. Lots of sideways action, right? Here or here, whatever, right? We're making lower highs and higher lows.
I came to my computer like 6:45, to avoid any temptation.
But are you starting to see how the market after the first half hour becomes very easy to trade versus the first half hour?
Yes, but why do you think like professionals trade in first hour? Like, I don't know why. I mean, it's so house. It's just I don't know.
I don't know where the market's going. I didn't see this big fall coming. I thought we were going to rally, right? But then when you looked at the profile, we saw the pattern when I took the picture this morning. I showed you the profile. And then, of course, 2 minutes after I take that picture, we go and rally to the back up near the highs, right? But if you look at where we ended up, even though we rallied, the point of control stayed down here all day. Okay. And then what happened was we came all the way back down to the point of control.
Yeah, this is by the way the good tip. If point control is not following the price, that's mean we're not going in that direction, right?
Well, not necessarily, right? What happened was we opened, we sold off, right? And then we had all this choppiness, okay? And the point of control was drawn like this right here. And then what happened was when I text you, we're right here, and then it took off and retested. We then started to build out a lot of market profile up here, but then the point of control was still down here. What I was expecting was maybe a double distribution day like this, low volume node right here, and then a second distribution. Okay, so it would look like this. Okay, which happens in this, but then what happened was right when we were starting to get here, price fell and we came back down. And then we came back down to the point of control, and then we just stayed back down in this lower distribution all day, and the point of control never pushed up.
Yeah.
But what could have happened was we could have gone higher. Now, if we stayed higher and then the point of control shifted higher, then I would have been like, okay, we're probably going higher. But we just didn't trade enough volume to push the point control back up.
Okay.
But yeah, I'm really proud of you because of the trades you took, the discipline, right? The patience.
Yeah, I was it was I'm happy about myself because I'm learning patience. This is the most important for me, and I'm not also chasing the trade. If I missed, I missed, but today because of this choppiness, there's a lot of fib trade that worked. Any fib you just measure, it worked. You cannot play all of them.
Here, real quick, I just saw something I want to show you. Okay. This pattern, up, down, up. Okay. Divergence. This is what we want to look for. Down, up, down, divergence. Right? Big red bars, right? Boom, sell, 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 bounce, sell, sell, right? Look at this. Look at all this crap right here. Even though we had divergence, go up one bar, go straight down one bar, go up one bar, go down one bar, but this is not what we want. We want things like this. We want things that kind of fall, bounce, fall, not this little ratchet up higher where the pullback is nil, right? but yet you keep seeing little divergences right here.
But do you see how kickback work here too?
Hey, no, of course. Not saying they can't work, but this is not what we look for. Because what will happen is it'll show you multiple divergences within the move at the end of the day, right? We want big move up, pull back, big move, something divergence here, right? Things like this, not that.
Okay.
It's something that I want you to train your eye on of like look at even the fib pullbacks, right? Look at this. Yeah, there's no pullbacks. Buy, right? The pullbacks are barely retracing, but you're getting little baby divergences. That is not what we want.
Yeah, I was just practicing this drawing the divergences. So in this you don't like this choppiness, right? And not
Nothing.
oh, what is I don't know what's happened, why it's kick. Let me find this. Was we here?
Yeah, right here.
Right here, yeah.
Yeah. Like this is what we want to see. We want to see a move down like this. Okay. Or here. We want to see a move down like this. We get oversold, a bounce, and then a rollover with a divergence. Okay, those are what we want to see. We don't want to see this stuff, right? Or something like this. If there were divergences here, we don't want to see that price action. We want to see big, the waterfall down and then the bounce and then the waterfall down.
Jason, if divergence would happen like right here, is it far enough from the price action?
Oh yeah.
Okay.
Even this guy, even this divergence, yeah, of course we'd want to see it up here. We'd want to see this up here. Okay, because there's that. But this is far enough away to where, okay, I'll try it. And as you watch, like hopefully as I show you all these things, you're remembering them, right? In your mind of like, okay, look here, watch this. What's happening? I know it's a lot of information.
Jason,
But
I'm gonna rewatch the session for a few times, trust me. Because it's really valuable lesson, and you need to you just put it in your head and you need to practice to observing this thing. It's not like we talked and that's it. I know it's a lot of information,
yeah, but like you said, have a checklist, right? Like something on your checklist would be this: when we make divergence, when I see a divergence at a low of a move, I'm going to start to look for Fibonacci retracement pullbacks. I'm going to look at the trend, and now I'm going to look for these pullbacks for the pullback trade. And then when I look for divergence, I want to see nothing to the left, right? I want to see the bounce. And what will happen is as you watch, you'll start to create your own little rules for you. the way you see the market, right?
Mhm.
Like me, dude, I don't look at any of this stuff. I'm not looking at a market profile like this. I'm not looking at all these moving averages and all these other lines. And dude, you see my charts, they're clean. But for you, you see that. So I want you to keep it, because that's what makes Yuri special in the way you see the market.
I just, I know it's even busy for me, but I really want to find more confluence, with the trade to make it like A plus trade. So that's why I'm see okay, volume profile like VPAC is confluence, so moving average. I have only 200, like I don't have anything else, and also I have this volume profile indicator. It's basically, I notice like previous right here, and I put it like untested. So I notice when it comes to this price, usually it's have some kind of a test move.
Okay. Yeah. Like I said, to me, give me a clean chart, because I've been doing it so long. I already know what the market profile looks like usually, right? Or I just look in the bottom left-hand corner. Yeah, I see my market profile. Okay, cool. I could tell you within a second, right?
Mhm.
Now, real quick, let me ask you, are we on the bigger picture? Are we in an uptrend or downtrend based on this chart?
Downtrend. Based on this chart, downtrend, because I see like I mean,
No, go back to all that. Go back a little more. Keep going. Keep going. Keep going. Right there. Right there. Here, I'm going to show you something. Hold on. A high, a low, a lower high, a lower low. Okay, that low took out that low, right? This bounce didn't get up here, right? A lower high, because this high didn't take out that high. A low, a lower high, didn't take out that high.
low.
It's actually a higher low just by like a tick or two. I could tell this made a lower low right here than this. Okay, but this is our leg. This is our major leg right here. Okay, just like this was a major leg. Okay, and so what's happening is, or even, sorry, from here to here, this leg, all of this price action is trading within this leg, that high to that low. The minute, if we take out this low, we're continuing lower. If we take out this high right here, we're now in an uptrend.
But we're still in a downtrend.
Oh, sorry. We go into an uptrend, but right now, a high, a low, even a high, a low, a lower high, right? Lower low, whatever. But I'm trying to train your eye to look at the significant highs and lows. This and this, all of this price action is playing within this range.
Yeah. I used to see this this way the market, so I know like and with this swing, we anyways, we're basically trading with this leg. Yeah, and right here we still we actually broke by a tick, right?
No, we never did. This
No, right
is
here.
lower than this.
Yeah, it's we broke this leg by
Oh, did we?
we broke this leg by 2 ticks. So
Oh, okay. So then hold on, because I thought I didn't know if we took it. So then this is our significant high, and this is our significant low. So price is playing here. So if we take out this high, it reverses the entire market.
yeah, that's how I see it too.
Okay, so all you need to do is take that and now put it down on a very small micro time frame. A high, a low, a lower high, lower low, right?
Mhm.
Lower high, boom. And then guess what? Divergence. We take out this high. Now we're looking for our fib pullbacks. And then guess what? We have the divergence, took out that low. So now here's our fib pullback, right? Would I've traded this? No, because chances are it's going to take out the low, right? So now it just becomes choppy. But now, right here, a low, a high, a higher low.
I don't see your mouse.
Oh, sorry.
Okay.
A low, a high, a higher low, but we're making a lower high. So this is just a wedge. So this either needs to break below or break above for the next trend.
Is it? So basically, we got this swing, and it's broke right here, right? It's broke right here.
Correct.
Now
Well,
we
we
have an
broke it
uptrend.
right here. This swing right here, think about, right? A high, a low, a lower high, lower low, and then this price action right here took out all that price action.
Now we're in an uptrend.
We're in an uptrend, right? This is a pullback, but we're still in the midst of the pullback. So you can literally draw a fib from here to here, looking for a pullback. And here we have a double top, our M pattern, right? So you could then draw a fib from here to here, and then draw a fib extension from here to here, back up, and see if things match up.
Jason, would you? I'll be like in one minute.
Go for it.
And there's a there's a lot of information, that you need to like see all this stuff. But I think I'm gonna focus on this, and in a few years, my chart will be clean.
Here. What I will tell you is, as time goes on, you're on a subconscious level, you're seeing all this right now, right? Eventually, you'll see it without all this. I could tell you right now, out of all of this price action right here, okay, just from even here, right? All of this price action, the point of control is probably right here. Just from all of this price action. So I don't need all this, right? I just kind of know where that point of control is. Up here, just from this price action, I know right here is the point of control.
Because you see all this, basically where the price was traded the most, right?
Well, it's just where we keep crossing back and forth, right? Think about it. We consolidate, go up, come back, consolidate, fall, come back, right? Consolidate, 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 right? That becomes our point of control. I don't need a market profile to tell me this, because I've seen it for so many years. But for you, you still need to learn all this. So it's actually helpful for you.
Yeah. Jason, what, like, I used to hate like arranged days and choppy market, but with your strategy, I'm loving it. You know, because it's a lot of opportunity. So how would you trade the strong trend? Like, how would you trade? Because sometimes when it's, you know, all day go down or up, so how would you trade those kind of days?
If I see it trending higher, I'll just start playing Fibonacci pullbacks.
But it's never with a like a strong trend. It's never pulled back on 6.8. It's only pulled back in 38.
No, it does.
It does?
You just got to draw your fibs differently.
Oh, from the kind of base supply and demand stuff?
Oh, here, zoom in just into this price action right here. Perfect. Okay, we're trending lower right now, right? Let's say this is a trend day, right? And we're just trending lower. Okay, cool. Here is the previous high right here, or here's the previous high. Let me just draw it from here to here as we're just stair stepping lower, right? That's all you're doing. And you're looking for a significant swing high. Like I would draw one from, I'd probably draw from here to here, looking for a pullback, a bounce, and then get short there, and my stop would go above those highs. So, or here. Let's say this was the trend day right here, right? All up here. This is 6:30 in the morning until 1. Okay, and we're just trending higher all day, right? Hardly any pullbacks. Well, guess what? Here's a nice base. Draw a fib from here to here when the reverse waterfall breaks, right? Draw it. Guess what? Came right down to the 61, probably. And then guess what? We make a new high, right? Draw it from this low to this high. Okay, that's the lowest peak, right? Mm-hmm. They're happening all day long. It's just, how do you look at the market? And hopefully this will change the way you look at the market.
Yeah, I mean, for me, let me, for example, let me try this. See, like right here, you know, when it's dropping like a waterfall, you know, you see the swing, but it's so wide, so wide. The risk is so basically, okay, you saw this and it start falling, so now it starts correcting. So where would you trade this? Like right here?
I wouldn't. I would have traded this probably from that high to that low on the bounce, and we would have missed it probably, right? Oh, look, it went right to the 61.
And
Okay. And then, but then when we took out this high right here, I know a high, a low, lower high, lower low, lower high, higher low that took out, when we took out this high right here, that created a low, a higher low. So now I know the trend reverse. So when we're up here, I'm gonna wait for the rollover. I'm gonna draw a fib from here to here. Okay, and guess what? Here's our 75, 61, and guess what? It bounced and we would have made money.
yeah, so basically, as soon as you see the we break the trend right here. So right here, no, where would you? Okay.
Well, hold on. Really, maybe even take a picture of this and draw your circles. Okay, a high, a low, the bounce. Here's our fish hook, right? We then roll over, take out the lows, make a new low. Okay. Now we could see, is there a divergence here? Yes. Draw it from here to here, here to here. What do I tell you? Divergences usually signal bottoms. Okay. But we know this was the prior high. Okay. From this leg down.